welcome. Good morning. You're watching Market Cafe with me, Snehi Shah, on ET Now. Now, this is a show where we take you through all the important global stories that we've been tracking for you over the weekend, all the global action coming in from the global stock markets. And in the second half of the show, we'll also look at all the important stocks that you should be keeping on your radar today, as well as what brokerages are keeping on their radar bright and early this morning. But before we kickstart with this show, how can we not talk about the cricket match yesterday? Now, the men in blue continue to dominate all rivals with an unparalleled 8-win streak after beating South Africa and Kolkata last evening. The man of the moment, of course, yesterday was Virat Kohli, who knocked a solid century on his 35th birthday and levelled the ODI centuries record of legend Sachin Tendulkar with 49 centuries coming in. A fifer coming in from Jadeja ensured an early pack-up for the South African team. India are now placed comfortably on top of the points table with a net run rate of 2.4, and we will now face Netherlands on the 12th of November. So, well, that's how the match panned out yesterday. Very exciting to watch, an early pack-up for the South African contingent coming in. With that, let's also kickstart the show then and start by looking at the global markets. Let's also look at the US equity markets first, and US futures were flat on Sunday evening after the major averages capped their best week so far this year. All of the major averages were coming off their best weeks of the year so far, also striking a positive chord to begin November trading. The Dow ended the week up 5%, its most since October last year. The S&P advanced 5.85%, and the Nasdaq finished the week higher by 6.6%. Now remember, it was also the best week since November 2022 for both of these indices as well. A soft monthly jobs report also drove bond yields lower, giving a boost to equities. The 10-year Treasury yield was down by 9 bips to 4.577%. And throughout the week, the benchmark Treasury yield has come off recent highs that at times saw it trade above that 5% mark, but now that has cooled off. Although the week ahead will be light on economic data and company earnings, seasonal tailwinds could help further the recovery in stocks. Meanwhile, traders will also be watching out for Fed Reserve Chair Jerome Powell, who is scheduled to speak twice in the coming days. Remember, last week the central bank kept rates unchanged for a second straight meeting as bond yields tumbled, and investors are hoping that this rate hiking campaign of the Fed is over. That's the handover coming in from the US. Even for intraday trading on Friday, all three indices have knocked solid gains. But with that, let's shift focus to Europe, and European stock markets closed cautiously higher on Friday, rounding off a weekly rally powered by a series of solid earnings and a perceived dovish tilt from the central banks coming in. The stock 600 ended 0.2% higher, rather flat, led by retail stocks, which were up 1.7%. Oil and gas saw the biggest drop, down 2.2%. Let's look at other European indices as well. DAX was up 0.3%, FTSE down 0.4%. So, well, this is the handover coming in terms of equities. With that, let's also shift focus to commodities, and let's also talk about oil, because oil prices settled more than 2% lower on Friday as supply concerns driven by Middle East tensions eased, while jobs data raised expectations the US Fed Reserve could be done hiking interest rates in the biggest oil-consuming country. Brent closed on Friday around 85 levels, WTI also close to $81 per barrel mark. Now, both benchmarks settled down more than 6% in the week that went by. On the supply side now, Saudi Arabia is expected to has reconfirmed an extension of its voluntary oil output cut of 1 million barrels per day through December. Based on analyst expectations, Russia too will continue its 300,000 barrels per day oil export cuts until the end of 2023. That's the word coming in from Russian officials as well. So, well, this is what oil did in the last week. Let's see how oil pans out, and with that, let's also take a look at all the important cues that you need to be keeping on your radar. And how can we not talk about earnings? Let's take a look at the earnings calendar for the week ahead. Well, today you've got Divi's Labs reporting their Q2 numbers. Tomorrow you have Power Grid. 9th November, Adani Ports will be reporting their numbers along with Apollo Hospitals. On 10th November, then you've got Hindalco, Coal India, M&M, as well as OND. So these are all the nifty companies that will be reporting their earnings this week. When it comes to the primary markets, then you've got the ESAF IPO. You've also got the Protean as well as ASK Auto IPOs that will be in focus today. So keep an eye out for all of these IPOs.
Absolutely, surely keeping an eye out on those important cues to watch out for today in trade. But let's get started and talk about other international updates that we have this morning. And no respite seen in this month-long Israel war as the situation worsens day after day. Heavy bombardments seen across Gaza through the night, and so far at least 9,770 Palestinians have been killed in Gaza since the inception of the war. On the other hand, atrocities are soaring as the UN Palestinian Refugee Agency is unable to reach the vast majority of its team in the Gaza as telecom and internet services have been shut down in a region yet again. Meanwhile, demonstrators have gathered in major cities around the world for the fourth straight weekend since the war began, and many protesters called for an end to Israel's bombardment of Gaza as a concern over civilians' casualty mount. Do remember that Israel Prime Minister Benjamin Netanyahu has been rejecting calls for a ceasefire until hostages are released. He also faces growing pressure domestically as protesters gathered outside of his home calling him to resign.
And Warren Buffett's Berkshire Hathaway posted a big jump in Q3 operating earnings while sitting on a record amount of cash. The Omaha-based conglomerate's earnings soared as much as 40%. However, the stock reacted to their first overall quarterly loss in a year.
Among other earning candidates, restaurant brands Q3 top line missed the estimates as stores sales growth slowed, and the company is spending $400 million in efforts to rejuvenate the burger business. The company warned that the fighting in Israel could have an impact on the future results.
And shipping group Maersk is laying off thousands as weak demand and lower freight prices weigh on revenues. The company in its Q3 results said that revenues had almost halved to $12 billion compared with the same period last year.
What Delhiites are now breathing is toxic, poisonous and harmful air as the battle for a clean air continues. The AQI in Delhi, Noida, Gurugram continues to be in a severe category as it inches towards hazardous levels. With the situation not getting any better, Stage 4 of the GRAP has been implemented with immediate effect in the Delhi NCR region. The GRAP 4 is generally implemented when AQI crosses the 450 plus mark category, and this also means that due to this rise in pollution, primary schools in Delhi will remain shut till 10th of November.
And well, in the last few days, the air quality in the country's financial capital, which happens to be Mumbai, has become poisonous. This is the second consecutive year when the air quality in Mumbai has hit the poor category, and in addition to that, the ongoing construction work in Mumbai for infra projects and residential complexes have caused and made matters worse. Let's go across to Shrishti to get further updates on this. Shrishti, take it away.
Mumbaikars are choking in bad air. Every now and then, the air quality remains poor in the city. However, the guidelines which are issued by BMC regarding the construction sites, remember there are 6,000 active sites which are in place in Mumbai. But the guidelines which are the basic ones, which is the green cloth should be put on the construction site around them. Basic barricading of 25 feet should be there. That can be seen floating by the construction site owners as well as the contractors who have been dealing with this particular construction sites. Where I'm present is the area near Lower Parel, and this area has a lot of footfall. Construction sites are at peak in this particular area. However, at every other construction site, we can see the guidelines which are being issued by BMC regarding the controlling of air pollution being flouted. However, BMC says that they would take strict actions on the construction site owners. They would give the inspection, they would do the inspection on the particular sites, but that still remains the question that how much it will help to the citizens. Will BMC act in time, or again Mumbaikars will face the bad air quality, which is the major problem in the city today?
Okay, thank you so much for that update coming in on the Mumbai air pollution as well. But on that note, viewers, we're going to slip into a short break. Don't go anywhere. We'll be back with more updates after this break. Welcome back, and you're watching Market Cafe on ET. Now let's look at what the Asian markets are doing this morning as well. And a positive start coming in for the Asian markets this morning, especially after the soft US jobs report and Japan data, which will be coming out as well. So we're keeping an eye out on that. As of now, yes, Asian markets have opened on a positive note. Whether you look at the Shanghai, that's up 0.3% in trade. You're looking at the Hang Seng, that too is trading with positive gains as of now as well, of around 1.34% as well. Kospi, Nikkei, ASX 200, all of them trading in the green, especially when you're looking at the Nikkei as well. That also we are seeing very strong gains coming in for the Nikkei. Look at that, those gains over there, right? 2.5% in terms of gains that we're seeing coming in from Nikkei. Clearly an outperformer in the Asian markets today is the Nikkei, and they're rising on the outlook that we could see coming in terms of the Japan's data points as well. So keeping a close eye on Nikkei as well. As of now, what the Nifty implied as open is indicated at as an uptick, a sharp up move in terms of 150 points uptick in the Nifty is what we're expecting. 0.77% is what the Nifty implied is indicating at. So let's keep an eye out on that. Clearly a positive start. It's what we are expecting at for the Nifty as of now, Snehi.
Absolutely, Vinay, and we're right around the festive season as well, and we've got a special Diwali programming lined up as well. We've got marquee guests like Ramdev Agarwal, Ravi Dharamshi, Sunil Singhania, Nilesh Shah, as well as a lot of other people that will be giving out special stock and thematic advice coming this Diwali. So this Diwali is going to be Muskan Wali on ET Now.
Welcome back, and you're watching Market Cafe on ET. Now let's keep it going with more domestic news flows, and what's the update coming in the absolute recent time is the central government's free ration scheme that aids 80 crore poor will be extended for 5 more years. Prime Minister Narendra Modi announced the decision to extend the Pradhan Mantri Garib Kalyan Anna Yojana, and while addressing a rally in the pole-bound Chhattisgarh, the program was introduced during the coronavirus pandemic in 2020 to offer relief to people hit hard by the lockdowns and stalling of the economic activities. Every month, the government supplied 5 kg of food grain free of cost to individuals. Let's listen in to the Prime Minister on this announcement.
मेरे गरीब भाइयों बहनों, मैं देश के गरीब भाइयों बहनों को आज दूर की धरती से बताना चाहता हूं, मैंने निश्चय कर लिया है, देश के 80 करोड़ गरीबों को मुफ्त राशन देने वाली योजना को भाजपा सरकार अब अगले 5 साल के लिए और बढ़ाएगी.
Well, that was a word coming in from Prime Minister Narendra Modi. But on Saturday, we also had the public banking major SBI report its Q2 numbers, and largely an inline set of numbers that was reported by SBI. Good quarter coming in for SBI as well. So let's go across and listen into what the chairman, Dinesh Kumar Khara, had to say on the company's numbers.
I think as far as the cost of fund pressure is concerned, a significant portion of that is already addressed. And but maybe another not maximum, not more than 5 basis point compression should be seen as far as the net interest margin is concerned. Though our effort will be to confine, to maintain this kind of a NIM on an ongoing basis.
Okay. Surely keeping an eye out on that as well. But Interglobe Aviation too reported its numbers. Somit, how are the numbers looking like for Interglobe this time?
Well, on the face of it, if you see Indigo's second quarter numbers, they appear to be above estimates, but there are a couple of one-offs in the quarter which actually aided the company to report a net profit as against analyst expectations of a net loss. Now, if you see the company's revenue on sequential basis, it was down around 10%. EBITDA declined by nearly 42%. Margins came in at close to 18.8%, while the net profit was down nearly 94%. Now, yields which measure the average fare per passenger per kilometer, now that declined by nearly 14% on a sequential basis. Now, it was a seasonally weak quarter, hence we had seen lower air traffic, lower yields and lower passenger load factor. Now, this coupled with higher oil prices also weighed on Indigo's second quarter numbers. Now, the numbers were ahead because of the one-offs, and the one-offs were related to airport charges because some provision reversals were done in the second quarter, and there were lower rental cost also for Indigo in the second quarter because the company had reported some claims that they had received from OEMs. However, on the conference call, the company did not disclose the full amount of these one-offs, but analysts believe that if you remove this one-off from the earnings, then the company would have reported a net loss in the second quarter as the street was expecting. Now, for the third quarter of FY24, that is the current ongoing quarter, the company is expecting their capacity to increase by only 2% on a sequential basis. Now, the conference call, the company and the analysts also were concerned about the aircraft grounding because nearly 40 aircraft of the companies are currently grounded, and they're expecting more aircraft to get grounded going forward because of the engine issues. Now, the lease cost for additional aircraft would also be higher because we are in an environment where there is a supply constraint, because of which the lease cost could be higher, which means that in the second half of the financial year, the overall cost for Indigo could also inch up going forward. On the yield side, the company said that the yields so far have declined on a high single-digit number on a YY basis, and they're expecting some recovery to happen in November to December. But what the analyst community is saying that for the third quarter, yields are at best could largely be flat on a YY basis. So no much improvement on the yield side, even on the festive season, is what the analyst community is currently factoring in.
Thanks so much for that. Interglobe Aviation, that stock will be in focus today on the back of that. But Somit, stay with us because chemical sectors is in focus as prices have fallen for most companies. And I believe Morgan Stanley has also shared a note on the sector as well. So Somit, what are the details on this one?
Well, on the chemical side, if you see, majority of chemical prices have witnessed a decline on a month-on-month basis. Most of the chemical prices witnessed a transient uptick in the first week of the month, first week of October, because there was a shutdown in China owing to the 7-day holiday of the Golden Week. However, the prices trended downward once the Chinese capacities were back on stream post the holiday period. Now, what Street is also expecting is that the export-led demand is expected to be muted owing to the global macro concerns that we are seeing. Now, on the pricing side, acetic acid, or in fact IPA, witnessed a biggest decline of around 19% on a month-on-month basis, and the major manufacturers of this chemical are Deepak Nitrite and Deepak Fertilizer. Now, acetic acid also witnessed a decline of nearly 19% on a month-on-month basis, and GNFC is the major producer of this chemical. On the consumer side, it's Reliance Industries, Indian Oil Corporation, Apcotex and SRF, which could benefit because they are consumers of this chemical. While soda ash prices, now that declined nearly 18% on a month-on-month basis, and major producers of this chemical are Tata Chemical, GHCL, DCW and Gujarat Fluoro, while Deepak Nitrite on the other hand is one of the consumers for this chemical. Toluene prices also declined by nearly 9%, but major manufacturers are oil marketing companies and oil refiners. Phenol prices declined nearly 7%, and Deepak Nitrite is one of the major manufacturers of this chemical. Acetonil also declined nearly 7% on a month-on-month basis, and major producers of this chemical are Deepak Nitrite, Balaji Amines and Alkyl Amines. So keep an eye out for all of these chemical companies in trade, because chemical prices on a month-on-month basis have declined with declines of close to 5 to 19% on a month-on-month basis.
Okay, Soumya, thank you so much for that. Keeping an eye out on those chemical companies as well. But let's not forget, in the world of startup, we did have EdTech major Byju's that has released its earnings for FY22. Obviously, they were delayed numbers. Now, the total income has seen a rise and the EBITDA loss has reduced as well. Let's go across to Anurag Joshi, who's joining in with us with more details on that.
EdTech giant Byju's reported its earnings for the financial year to March 2022 after a prolonged delay. The company reported an EBITDA loss narrowing to about 2,300 crore rupees in FY22 compared to about 2,400 crore in the previous year. The company said that the core business total income has increased to almost 3,600 crore rupees from about 1,600 crore rupees last year. Byju's FY22 earnings, which has faced a prolonged delay, was watched by its stakeholder who had been demanding that the company come out with the financial results so that they have a better understanding and insight about the financials of the company. Now, the company had earlier flagged plans to declare the FY22 results by September 30 and the FY23 results by the end of December. So there was still a little delay in the company coming out with its earlier guidance on the declaration of the results. Byju's has been in a legal tussle with its $1.2 billion Term Loan B facility creditors, and one of the key contentions for the lenders who had sued the company had been that the company had not declared the FY22 results, and one of the key reasons for taking the company to a court in the US was that this was a technical default on the part of the company. In June, Deloitte Haskins and Sells resigned as an auditor of Byju's on the grounds of the delay in the earnings.
All right, that's the word coming in on Byju's FY22 numbers. Let's get a move on then. And makeup and beauty e-commerce giant Nykaa hosted the first of its kind beauty and lifestyle festival called Nykaa Land in Mumbai. ET Now's Aishwarya caught up with the CEO at Nykaa Beauty, Anchit Nair, who shared his insight into the synergies of the event and how the company is unperturbed by competition. So listen in to a slice of that chat.
We are market leaders, that's undeniable. We've been in this business for 10 years plus. But it's very important for us to give back to the ecosystem and to help continue to grow the love, the aspiration, the demand for beauty. And Nykaa Land is just one of those types of events that we plan to do that will help us to continue to expand the addressable market for this category. In terms of spend, I would say that this has been an event which we've had a lot of support from our brand partners. So there's a lot of involvement and investment, not just from us, but over 80 brand partners. And I think as long as you focus on the customer, competition will come and go. I think India retail is one of the biggest retail markets in the world. There is enough opportunity for more players, but it's all about getting it right by the customer, and we've done that, and we continue to focus on that. So I wish the competitors all the best, and I think they can really help us to grow the market even faster.
Okay. But on that note, viewers, we're going to submit a very short break. Don't go anywhere. We'll be back with more updates, more stock-specific updates after the break.
Hi there, welcome back, and thanks so much for staying tuned to Market Cafe. This is ET Now. Now, we had the honor of being joined by Chris Wood, who's the Global Head of Equity Research at Jefferies, and he joined us for the occasion of Diwali. We will be having a longer chat with him later in the day today, but what are his bets for the medium, short as well as the long term? Listen into a slice of what he had to tell us.
So in less than 6 months, people should look to buy gold and Bitcoin, for the very simple reason I would expect adjustment. And based on my view, the monetary tightening impact is going to kick in on the next 2 quarters. You should buy gold and Bitcoin because it will respond to any change in Fed policy. But if you're a millennial, you won't want to buy gold, so you should buy Bitcoin because there's a halving of Bitcoin Can Indian people trade Bitcoin?
You can buy Bitcoin.
Yeah, so basically the halving of Bitcoin's coming up next year.
Yes.
And I believe it's not a precise timetable, about April, May.
The volatility will come down.
But the precedent is you make money if you buy ahead of the halving.
Okay.
So on the 3 to 6 month period, I would say, yeah, gold mining stocks and Bitcoin. And then on the
1, 2, 3.
Oh, on the other two environments, I'd buy Indian equities.
So for the medium term, which is 1 year plus, and for the really long term, which is 5 year plus, you would buy Indian stocks.
Yes.
Okay. And would you be again advocating that anybody who's got a long term time horizon, which is 5 year plus, the focus should be, according to your portfolio, real estate? It should be largely capex driven, and it should be financials. 3 sectors should.
But that can change.
But as of now, that's your view.
As of now, that's my view. But my key point is, yes, any correction from external sources in India should be bought.
Okay, so do stay tuned in to ET Now to get the full conversation with Chris Woods. But let's move on and talk about Eicher Motors, because we have a Citi that has come out with a note on Eicher Motors with a buy rating. Vamakshi is here with more of the details from the note. Vamakshi?
Yes, Citi has come out with a note on Eicher Motors with a buy rating, but more importantly, the company has actually opened a 90-day positive catalyst watch on the counter. Now, since the launches of Harley-Davidson as well as Triumph, there was a widespread skepticism. Now, when we look at the Triumph launch, that has been the response to it has been quite underwhelming. Not just that, even for Harley-Davidson X440, they don't believe that Royal Enfield could actually concede a significant amount of market share. Additionally, some new models are expected to come in from Royal Enfield over the next 3 to 9 months, and this in turn, in Citi's opinion, could support the overall volume growth. Not just that, they're expecting the second quarter numbers from the company to be quite steady, and they also expect EBITDA margin expansion of almost 40 basis points sequentially. They're also expecting this to be aided by better mix as well as benign commodity costs. So all in all, given all of those factors, Citi has initiated a 90-day catalyst watch on Eicher Motors. They've given a buy rating, target price of 3,900 rupees per share, and on the back of that, keep an eye out for Eicher Motors.
Alright, Eicher Motors will be in focus on the back of that, so we will be keeping an eye out on that stock. Well, we did touch upon SBI's Q2 results that were declared on Saturday, but let's also take a look at what brokerages are saying about SBI, and let's start with Kotak. Kotak Securities is maintaining a buy on the stock with a target price of 725 rupees per share. They say that the solid return ratios have been clocked in despite wage settlement provisions. They say that the balance sheet looks solid and fewer pressure points can be seen on the balance sheet. They say that the narrative struggle continues and the ROA play is relatively on the lower side. So that's Kotak's view on SBI, maintaining a buy with a target price of 725 rupees per share. Also, CLSA has also come out with a note on SBI. They too are maintaining a buy on the stock with a target at 700 rupees, slightly lower than the target that Kotak has given. They say that the net interest margin moderation is a slight surprise. NIMs are a tad bit soft coming in this quarter, and retail loan growth has moderated off a high base. And they also say that CASA remains challenging and asset quality continues to improve for the banks. On the back of that, they maintain a buy stance with a target of 700 rupees per share.
Surely, but let's talk about more brokerages, because a lot of earnings did come out on Friday as well. 2 of them from the consumption side was obviously Zomato as well as Titan. Now, first, let me take you all through Zomato, what happened on that front. When Jefferies has come out with a note on Zomato, they're maintaining a buy. They've hiked the target price to 165 rupees per share from previous target price of 130 rupees per share. They believe that always delivery delivers more than expected, so that's a positive sign there. Also, another comprehensive beat, which is meaningful upgrades from the top line as well as the bottom line. Stable EBITDA margins in the food delivery is something that everyone's keeping an eye out on, but that could be something that may have disappointed someone on the street. But as of now, Jefferies maintaining a buy and hike the target price. Management has given a commentary in terms of the growth versus margins. Also, they will prioritize growth versus margins on a quarter-on-quarter basis, so keeping an eye out on that. We have CLSA that has upgraded Zomato to a buy from a previous outperform rating, hike the target price to 168 rupees per share. And what they are highlighting for Zomato is that quick commerce visibility is increasing. The gross order value acceleration was primarily driven by increase in the monthly transacting customers. So as of now, they have upgraded the stock to a buy. Let's move on, talk about Titan. HSBC is maintaining a buy on Titan given a target price of 3,900 rupees per share. Good performance, reinforcing that Titan's structural appeal is quite strong. Q2 was a beat on the EBIT margin front for the jewelry segment as well. Scaling up of the international business is on track for Titan, so keeping an eye out on that. That's why they're retaining the buy rating. CLSA upgraded Titan to a buy with from an outperform rating. They've hiked the target price to 3,948 rupees per share. So yes, two positive notes coming in for both the companies actually. So notes are quite positive both on Titan as well as Zomato. Let's keep an eye out on both the stocks today, Snehi.
Absolutely, Winnie. Both of those stocks will be in focus on the back of the numbers and these positive brokerage notes coming in. Let's get a move on then and listen into Atul Suri of Marathon Trends PMS. He shares his outlook on a host of sectors like banking, pharma, as well as his Nifty target going ahead. So what's this number that he's looking at? Listen in to find out.
The interesting part is in this fall, you rightly pointed out that the only sector that made 52-week highs is reality, right? So that is definitely one big positive. But the question is that, as to how big we make the frame. Let's go back 10 years and let's see how real estate has performed. So you'll find that actually the dog sector for the last decade, there were two dogs, I tell you. One was PSU banks. Yeah. They were the best performing last year and they're the best performing this year. And real estate is the last one, I think, left still. But you will realize that if you extend your time frame, you'll realize that I'm not talking about 1 week, 1 month. Yeah, sure. But the fact is that when you have such a big revival in the market, when sectors after underperforming for a decade move, the rallies will not end in a few weeks or few months. They tend to be very elongated. And case in point is PSU banks. I mean, the trade of the last decade was long HDFC Bank and short any PSU bank. And if you see the trade of the last 2 years was actually the reversal. And we can talk about it today. But if I told you that 2 years ago, you say, listen, boss, what are you smoking up? Because it was a decadal move, So it takes time. It takes time to adjust.
So what are you smoking up?
I'm a black coffee person, man. I love strong coffees.
But Atul, coming back to the PSU bank trade, there was a kind of crop of traders, investors who got in early, played the absolute low-hanging fruit, and then SBI, BOBs of the world went through a sideways kind of a...
Sure.
Is it providing opportunity to get in once again? Because it has not moved in the last 3-4 months at least, SBI, BOBs, but the numbers are supportive. Ownership has reduced a lot.
Sure.
You think it's giving time to get in once again?
I think so. I feel that what has happened is that they did run up, they surprised. They have corrected, every sector stocks have to correct. But as you see, I'm already seeing that right now, that in the last few days, some very good early breakouts are happening. So which gives me a sense that the next round also, these will participate and they have not topped out.
So Atul, money is not made by looking at history. Money is made by looking at futures. So
Absolutely.
What could be part of the Sensex 3 years from now? That's a better question, right?
I think that's a very relevant question. And as I said, that what is going to really change is that the last decade was dominated by two sectors, IT and private sector banks. Okay. I have a feeling that a lot of sectors have been ignored. Like we spoke about real estate, we spoke about cap goods and infra. I feel that these will actually re-emerge and you will see a higher weightage or a lot of stocks would actually enter from this phase. So I do think that from what I read in the markets, I'm a student of the markets, that we are setting up for an industrial. See, that has eluded us the last decade. That is why these few narrow kind of defensive plays worked out. But the way the market is positioned, the way stocks are moving, the way the numbers are coming out, I think we are set for an industrial revival. And as I keep telling people, and it may sound a bit boisterous, but I get a deja vu feeling of the 2003 to 2008 bull market because the sectors and themes that are moving are very similar to what had happened then. Of course, we were in denial for a long period of time. It's only after 2008 that we realized, oh my God, it was such a big bull market. But I do get a sense that once an industrial revival happens, that's the potential and the kind of bull market India can see.
Are you seeing any strength in the pharma sector right now?
I think there are very interesting places there. Again, this is a sector which probably from 2015 or so hasn't done much. All these big names, They have, I think once you had started having those US FDA problems, I think 2015, 16 or thereabouts, they have not done much. So I think they're very quietly moving. But what I find more interesting is the healthcare space. And there I like hospital stocks. We do have a fair allocation towards hospital stocks. They are not your typical pharma stocks, but I think that is another very interesting and secular play, under the radar, under-owned, but I do think that is actually trending out very well.
Would you like to revisit a Nifty target of 21,500?
Not really, Nikunj, not really.
You want to extend it now because it's
in
not
fact,
very far.
that is when I would tend to be cautious when I get so myself, this thing, I realize, oh my God. It's typically that at 17,000 to say 21 is very difficult. So there's disbelief, then there's acceptance, and then you laugh about it. So when I start laughing at my target, I actually should be careful about it.
So 21,500, then when it reaches there, you'll take a fresh guard.
Yeah, we look at that. We look at new realities the world is see, and ultimately that number is not about that number. It was the direction.
No, just
21 ka 22 ho gaya ya 21 300 bhi ho gaya. That's no big deal.
Well, that's the word coming in from Atul Suri. Let's also take a glance at what the stocks to watch in trade today could be, the potential buzzers in today's trading session. And the first one could be JK Cement. Now, its earnings are the best amongst peers, and EBITDA per ton has come in at $1,028. So that's a positive coming in for the stock. Bank of Baroda, on the other hand, the PPOP has grown by 33% YOY, which has been led by other income. So, well, a positive coming in for the stock. A buzzer to watch out for in trade today. CG Consumer also on the back of numbers. Q2 profit after tax down 23% on a year-on-year basis. So a negative coming for that stock. And lastly, also PB Fintech, Q2 loss of 21 crore rupees versus loss of 12 crore rupees sequentially. So while loss has widened for this stock, it's a negative indicator. Let's see how these stocks pan out in today's trading session. Also, on the back of earnings, let's also look at some key management commentary that we've been getting from a bunch of companies, and let's start by talking about Escorts. Now, Escorts, the management guides for FY24 volume growth to remain flattish. Exports volumes, they say, may degrow by 10 to 15% on a year-on-year basis in FY24, but they expect 20 to 30% year-on-year growth come FY25. Railway division, they believe to maintain double-digit growth in FY24 and FY25 when it comes to that division. Capex guidance has been lowered to 200 to 250 crore rupees for FY24 versus the earlier guidance that they had given of 300 to 350 crore rupees. So on the back of that, Escorts will be in focus. Moving on, Bank of Baroda, we've also got some management commentary coming from there. Total advances growth is expected to be 14 to 16% for FY24. Retail book to grow at 20 to 22%. They also say that deposits growth to be anywhere between 12 to 13% for FY24. And FY24 NIM guidance also stood at 3.15%. So management commentary coming in from Bank of Baroda. Let's move on to 361 then. The net flows guidance is rupees 35,000 to 40,000 crores for FY24, and most of the private equity outflows seen in the last few quarters are likely to come back by Q4. That's what the management of 361 is saying. Let's go across and see what the management of Relaxo is saying, and they expect double-digit revenue growth in the second half of this year with a 14% plus margin. They say that as raw material prices have cooled off, focus will be on expanding the distribution channel rather than price cuts. Word coming in from Relaxo. Also moving on to the management commentary from Kalpataru Projects, and they have revised the revenue guidance downwards from 25% plus, to 25% plus from 30%. They will undertake some asset monetization in Shubham Logistics to reduce the company's debt. Also lastly, speaking about NOSIL, let's see what the management is saying. They say that they've indicated the aggressive dumping from China to continue in the second quarter. Demand is lower from Europe from the tire segment. So, well, a whole host of companies and management commentary coming there. All these stocks will be in focus on the back of that. But let's also shift focus and look at the stellar lineup that we have for you today on the channel. And starting at 8:30, we will be joined by Anuj Khanna Soham, the founder, MD and CEO at Affle, and he will be here to talk about the company's earnings. Sticking with the earnings theme, then at 9:40 we will be joined by Ashok Sonthalia, who's the CFO of Titan, and at 9:50 we will be joined by Arun Maheshwari, the joint MD and CEO of JSW Infrastructure, also here to highlight the company's Q2 earnings and the guidance going ahead. At 10 o'clock then, Premchand Devarakonda, who's the CFO at Electronic Smart, will join us to talk about the company's numbers. At 10:20, Hemant Jalan, the CMD at Indigo Paints too, will be here on the same topic. At 10:30, we will be joined by Ameera Shah, promoter and MD of Metropolis Healthcare, and she will be here to give us a quick roundup of the company's Q2 numbers and the outlook that they have for this company going ahead. And lastly, at 10:45, we will be joined by the President and Director of JK Lakshmi Cement, that is Arun Shukla, also here to talk about the company's Q2 numbers. So keep an eye out for all of these guests on the market starting at 8:30 today. Well, with that, we're at the end of this edition of Market Cafe. But while I bid you goodbye, listen into what Chris Woods had to say in case India sees a change in government, a change in power coming this election season. Listen into what he foresees for the markets happening if this happens.
The foreigners, we believe global emerging market funds are only about 1 or 2 percentage points overweight India, which, given India's got, in my view, too low a benchmark weighting in the emerging market index, given the the strength of the Indian story, I think that's very, that is not overweight at all. That's very, foreigners could be a lot more overweight India. So any pullback in Indian equities, in my view, will be bought by foreign investors. Meanwhile, that's dedicated global emerging market funds, but there's a whole category of global equity funds who historically have not invested in India. It's now become consensus that the new long-term growth story in Asia is India, not China. But while this is the consensus, global equity funds are not positioned for that. So there's a huge potential for, in the next 5 years, for global equity funds to start investing in India. The base case has to be a sharp correction if the government's not re-elected. I think the parallel is 2004, which was a big surprise when it happened. This is a market with a lot of domestic money in, and I think that would be a big shock to the market. But I do believe the foreigners would buy on such a sharp decline.